All right, hi and welcome back, guys. Talking about this session, which is on DT amendments, but before that, talking about what just happened. If you're watching this video, more or less, you're someone who gave the last exam, didn't get it through. I'm sure very disappointed with yourself, but guys, it happens. I don't want to give any TED talk here. I don't want to make it sound that this happens with everyone. No, it happens with a few of us, but it happens. Only thing I want to tell you is looking back, I have a lot of friends and a lot of students who've taken an attempt extra, but they are in a very happy and a very good zone right now. So it sometimes there is a little delay in the success, but you shall see it in the next attempt. And to help you do that, I'm looking at covering the amendments. First is DT amendments, and the next video I'll be covering the GST amendments, so that while you prepare, you have an eye on these amendments as well while you prepare for your tax paper number 3. So let's not waste too much time. Let's get straight to the point and talk about the amendments. Common questions, FAQs. So I've heard the entire Income Tax Act has changed. No, guys. Nothing of that sort has happened. The Income Tax Act is still Income Tax Act 1961. It is still the same that you studied for your JAN exam. Don't worry about it. Yes. So has there been some changes? Yes, of course. Every Finance Act or every budget, there has been some changes. The finance that was applicable to your exam was a Finance Act 2023. Now it's a Finance Act 2024. Guys, think like the government. The government wants a little more tax, so they've increased some rates. The government wants to give some at the bottom of the people some benefits, so they've reduced some, or they've increased some exemptions. And the government wants to push people to go to the new scheme, so they've done some changes around that. So we'll talk about that. To make it life simpler, I've done chapter-wise DT amendments. Basically, that means for every chapter when you study, you can watch this video and see if there are any amendments, or you can watch this PDF, read this PDF, which will be shared in a link to this video, and you'll know which chapter has what amendments, so that you can cover them as well. So let's get going. I've rolled up my sleeve quite literally, and let's start this DT amendment session. This is applicable if you're giving the May 2025 exam and September 25 exams. Guys, just saying, in case you are using an old book, ideally, especially for DT, not so much for GST, ideally, whichever book you're referring to, especially if it's my book, please go to the academy and buy a new set of book, because it'll be easier for you to refer to a new book, especially with numbers and all changing. If you can't, then be patient with yourself and make the new changes yourself while you study. But ideally, buying a new book and studying from that would be ideal. The handwritten notes can continue, everything else can continue. Only thing is this. Also, I will attach a link to the Google Drive for the new amended videos, so you can watch those videos applicable to the May exam. So I will also give a link to that Google Drive for DT and GST, where you can access the videos, revision videos as well. All right, let's start, guys. When we started our DT journey, the first chapter was Introduction to Income Tax, where we saw about the Income Tax Act, the rules, the year, etc. Who's the assessee, who are the persons. In that, one very big change has happened. What is the big change? The previous year, which was previous year 24-25, now has become previous year. Earlier it was 23-24. Now it has become 24-25. That means when you give your exam next, the year you will see mostly in the exam will be 24-25, which is assessment year 25-26. Keep that in mind while you're studying, so that you can change that appropriately in your mind. Most questions will be of this year. Next, not in the pattern that ICI gives, but in the pattern that we've understood, I have run the next chapter as income from house property. You already know, guys, this is the next chapter that we had studied, and while doing income from house property, there are 3 amendments that you should keep in mind. The first, guys, if I rent out a house property, you know it's LOP, and I'll be taxed under house property. But what if it's my business to rent out house property? Example, in Bangalore, Mumbai, Delhi, etc. I have dozens of houses I've given on rent, and I earn rental income. I used to be a businessman in that case, and I was taxed under PGBP. But that has undergone a now change. The government has said that, listen, if you're renting residential house property, not commercial, residential house property, then the income from that, even if you have 1 property or 10 properties, will go under IFHP only. The logic is, in PGBP, the people used to take lots of deductions. Here, you can take standard deduction of only 30%, plus municipal tax and interest. So the government says that, listen, you have to come back to our IFHP, even if you have multiple properties, but residential properties. So what if I have commercial properties? Can I go under PGBP? Yes, but for residential properties, even if it's multiple properties, you cannot go under PGBP. You will have to go under IFHP. Next, SOP interest. You know SOP, the house that you stay in by yourself. In that case, you are allowed a deduction of 2 lakh or 30,000, as the case may be. But if you are under a default tax regime, The government has said sorry. Now for default tax regime, this SOP interest will not be allowed under the new regime, which some of you already know, because these are not just the changes from the Finance Act 2024, but these are also changes you should know. So SOP now is 000, and even the interest is 0. Not just that, if you have a loss from house property, whether it's LOP or SOP, that loss cannot go outside the family because it's become non-friendly. Example, let's say I have an LOP1 and let's say I have LOP2, and I have a profit of 40,000 here and I have a loss of 60,000 here. Can this be 60,000 be set off against 40,000? Yes. But the balance 20,000 I cannot go outside. That means, guys, this loss cannot go outside. It will become non-friendly. And not just that, guys, it cannot be carried forward. That means this 20,000 to the next 8 years. No, all of that cannot be done now in the new scheme, in the new head of income. If you still want to do that, you can go under the old scheme and you can still take that. So these two changes are only and only applicable if you are in the new, that is the default tax regime. All right. That's the second chapter. We now move to the third one, which is exempt income. Exempt income is happy because in exempt income there is income but there is no tax. So here there is a major change. Major basically means there's some details we need to be careful about. Let's see what is the change. Guys, you know, people take life insurance policy. You pay a premium and something happens to you, they pay the money to your family. If nothing happens to you, some money is coming back, called money back policies. Let's talk about that. Life insurance policies, guys, if you know, if the amount has been received on death of a person, then the government does not have any taxation. That continues even till now on a very sentimental ground. They don't have any tax in case this happens on death. But other than that, if you get the money, example, you get the money after a few years, called money back policy, then it used to be exempt if all the premiums were low, which is still there. Low premiums earlier was 20%, now it became 10, and low was 15. Disabled children, disabled people, it was 20, which became 15. All that I've already explained, so I'm not going to those details. But now, if you've taken a policy on or after 1st April 2023, then there is a new condition that, listen, you should be a middle class person, only then this receipt will be exempt. If you pay huge premiums, that means the premium in 1 year you paid on one or multiple policies on your life is more than 5 lakh rupees, then even if it's low, this will be taxed. What do I mean? That for policies before 1st April 2023, only look at the first condition. But if it's a policy on or after 1st April 2023, you'll have to figure both the conditions. That means the premium should also be low and it should be up to 5 lakhs. Let's take an example. A policy taken in the year 2018, I will only see 10%, that is low premium. I'll not see the 5 lakh condition. The policy taken today, guys, in 2025, then I'll see low premium also. That means the premium should be up to 10%. An example, the policy is for 70 lakh and low premium is 7 lakh. No, that will not make it exempt. So even that, even if it's low, it has to be low and it should be up to 5 lakh. One policy or multiple policies, but this is only for policies taken on or after 1st April 2023. Be careful of this. This can be asked in the exam. If it's not asked yet, it becomes an even more important concept that can be asked in the exam. All right, so moving from life insurance to IFOS's income from other sources, let's see what happened here. In IFOS, there are 1, 2, and 3 changes. Mainly, actually, there's only one change, and we're talking about in 3 different parts here. There's a new section which is included in section 222F. Now, let me take you what is 222. There is a company which is out giving out money to the shareholders. That is called dividend. But if you remove money from the company to the shareholders without calling it dividend, it used to be called as deemed dividend. You remember the sections 222 A, B, C, D, E. A for assets, B for bonds, C for closure, D for decrease, and E for exception, that is a loan. Now there's another friend joining them there, which is 222F. I'll tell you what happens here with an example. Guys, let's say you had a share of Reliance for 1000 rupees and Reliance is doing a buyback and they are offering you 1800 rupees. That's called a buyback, and you are happy to do this buyback. And in this case, you earned an income of 800 rupees. Of course, if there is income, there will be tax. But this used to be taxed earlier by the company. The company had to be taxed on this till this date on 1st October before that. And for you, it used to be completely exempt because the company has already paid tax on this. This is the story up to 30th September. But now from 1st October, there is a small change, which is rightfully and logical. Guys, between the shareholder and Reliance, who has made the money? The shareholder. So why should the company pay the tax? So the company will not pay the tax anymore on buyback of shares. Then who will pay the tax? Obviously the shareholder. You had a share of 1000 rupees, you got back 1800 rupees, so this is your profit of 800, that should be taxed. But the government says this 1800 entirely will be taxed as deemed dividend under 222F, because it is also money going from the company to the shareholders. But that's not fair, sir. My profit is not 1800, is only 800. Yes, I understand. So this 1000 you can take as a deduction, and capital gain as a capital loss, which can be later set off. So net impact, you are taxed on 800 only, but in two different heads. This will go under section 222F. So summarizing with a shortcut, F is for finally the company did a buyback. If the buyback in the exam is up to 30th September, then for the shareholder it is exempt, company pays the tax. But if it's on or after 1st October 2024, then in that case you will have to pay the tax under 222F. It will be added to IFOS, and the cost can be taken under capital gain as a loss. That is an IFOS. This is one major change. Next, family pension. You know, guys, pension is taxable. If I get my pension, it will be taxable. If you get your pension, it will be taxable. But if our family members after us get a pension, that is taxable with an exemption that used to be 1/3 of the amount, or 15,000. That 15,000 has been increased to 25,000, but only if you're in the default tax regime. That means, what if you're in the old regime? Then it's still 10,000. Sorry, 15,000. So 15,000 in the old scheme and 25,000 in the new scheme. All right. We move ahead. PGBP, a very big chapter where you have a businessman who earns incomes. There are expenses like rent, electricity, depreciation, additional depreciation, scientific research, bank interest, salary, PF contribution, other general expenses. You can minus all of that. And there we see what are the changes. First change. Guys, partners get salary, which we call as P salary. Partner's salary is always taxable under PGBP. Yes, I know, said salary, but it's as an exception taxable under PGBP. You already know this point. Maybe it's in the background, but you know this point. Now, it used to be taxed up to a certain limit. That means there was a certain limit, and that limit depended on the profit of the partnership firm. Example, guys, I'm a partnership firm back in Mumbai. I'm a partner in a partnership firm back in Mumbai, and my salary depends upon the partnership firm's profits. If the profits are high, then my salary also can be high. So what was the limit earlier, guys? Earlier, the limit was, take your profit, example 10 lakh rupees of the partnership firm, up to 3 lakh and above 3 lakh was the concept. Up to 3 lakh is 60%, and above 3 lakh used to be 90%. And if the amount is very low, example, the partnership firm has made very low profits, then this amount would be very low. Then in that case, the government would allow you to give a salary of at least 1,50,000 for the year to all the partners. Now there has been a change in this. Hear me out. The change is nothing but just double the numbers. Now it's not 3 lakh. This is up to 6 lakh. So profit up to 6 lakh, 60% of that. Example 3 lakh 60 here. And above that, example on 10 lakh, above 6 lakh is 4 lakh, 90% of that. So 4 lakh 90% is again 4 nines are 3 lakh 60. So total is basically 7 lakh 20. I might be going on wrong on the maths because I don't have a calculator here, but you can do the maths, and this is the new rate. 60 and 90 is the same, but this becomes 6 lakh and this is above 6 lakh. That is one change. So this is now 6 lakh and this is above 6 lakh. And this 1 lakh 50 also they doubled and they made it 3 lakh. So in case the salary that you can pay to the partners is lower than 3 lakh, then you can at least pay 3 lakh. This is for people, partnership firms who make very low profits or who make losses. Second, guys, 44AB. You're a big fish. Luckily, you've done well in life. So government says, listen, you're a big fish. At the end of the year, you need to go to a CA and get your accounts audited. Now, who can get the accounts audited? For a big fish, your turnover had to be more than 1 crore rupees. In that, there's a new change. Of course, some of you already know it because I've already put this in a handwritten notes and discussed it. This is not a Finance Act 2024, but it's important, so I'm discussing. This 1 crore limit, now you can get 10 crore limit. That means up to 10 crores, you don't have to go to an auditor. Guys, this 10 crores is only if your cash receipts and your cash payments are low. That means up to 5%. This is a change which you should know. Alright, so that's 44AB, audit the books. For you, there are two limits, 1 crore and 10 crore. If you're a businessman, if you're a professional, don't worry, we've increased your limit also from 50 lakh to 70 lakh, 75 lakh, sorry. But with the same condition of cash up to 5%. Next, guys, is presumptive taxation. Life can get very, very simple and very, very easy if you go under presumptive taxation. That means you have to tell the government your turnover and they assume your profits to be 8% or 6%. You know this section already. Now, what is the change? Presumptive taxation, as a businessman, you could opt for it. If your turnover is up to 2 crore, remember, right? Resident, individual and turnover up to 2 crore. That 2 crore now has been increased to 3 crore. That means more people can go under presumptive income, but provided the cash transaction is up to 5%, same condition. And same for professional, 50 lakh to 75 lakh if the conditions of cash are met. Next, clubbing. Guys, clubbing of income means it's your dog, you've given it to someone else, and the government said, listen, I've seen you give your dog to someone else, the dog will come back to you. So they do clubbing of income in that case. Now, what has been the change there? The major change there is on HUF. If I have an asset, this is me, I have an asset and I give it to an HUF. Example, I have debentures, which I give it to an HUF. Now that's my dog, so the interest income will come back to you, me, that you know that the asset does not come back, but income comes back. But if there's any partition in the HUF and the asset goes to my mom, to my dad, to my brother, to my spouse, and to my children, then in that case, will income still come back? Yes, but only of spouse and of children. So spouse will come back, not of the income which is gone to my brother, mother, and father, only to those relations which are already specified. So this is spouse and this is children. This is the only change which is in clubbing of income. Next, we go to the next chapter, which is called set off and carry forward of loss. It's an interesting chapter. You know, you have to focus on those who have losses and then set it off against those who have profits. Now, in this case, you already know a big change that has happened in house property. First of all, if you have any loss from house property, I'm talking about the default tax scheme. If you have a loss from house property, that means LOP loss. You cannot go outside. That is first thing. And even if you have still a loss, even after within the family, you cannot carry it forward. So this has already been spoken about, but all this is in the new scheme. If you still want SOP, if you still want to go out, etc., then you have to be under the old regime. And one is virtual digital assets, something new, as people invest in cryptocurrency. If I've spoken about it in class, I also have an investment in a Bitcoin, which is right now profitable. But God forbid, if I have to sell it at a loss, then that loss cannot be set off against any other incomes. It's like gambling losses, the losses cannot be set off. So this is another chapter called set off and carry forward loss. Now we go to the next chapter, which is capital gain. So beyond all the hype of capital gains, what if I tell you capital gains has now become easier as compared to what it was earlier? Yes, guys, the change in capital gains is real. But as a student, as a taxpayer, I think it's more tax now going from the taxpayers. But as a student, I think it's time to celebrate because the change is actually good for you. You have to do less. I'll talk about it here. So capital gain, as you know, guys, I have some gold worth 30 lakh rupees. I'm selling it to 38 lakh rupees. There's 8 lakh rupees of profit, whether it's short-term capital gain or long-term. If it's short-term, then I'm taxed on normal rates. If it's long-term, then I'm taxed at 20%. This was live before 23rd July. 23rd July, why? It's not Nirmala Sitharaman's birthday. It's the day 5 budget came out, and that day the government decided to do something. So on or after 23rd July, some new changes have happened. So whatever you studied, ATPSC, everything remains the same for any asset before 23rd July. So in the exam, if they say an asset is sold on the 2nd of May 2024, then old provision. 10th of May 2024, old provisions. 22nd of July, also old provision. But if it's 23rd July 2024 or after that, then the new provision will apply, which is like this. ATPSC, asset definition is still the same. Your gold, your shares, your land, your building, all of that. Next, transfer, that is getting rid of it, same definition. Next, period of holding. Here, there's a small change. On or after 23rd July, if you hold the assets for 12 months, 24 months and 36 months. No, 36 months has now been removed. So it's only 12 months, which you already know as listed Zoom, my shortcut, listed shares, zero coupon bond, units of UTI and units of mutual funds. And 24 months is all other assets. Gold, 24 months. Building, 24 months. Unlisted shares, 24 months. Diamonds, 24 months. So as a student, it's easier because you have to only remember 12 months or 24 months. That's the first change. The period of holding will now only be 12 months or 24 months. Next, selling price. When you sell an asset, the higher the selling price, the more the profit, the more the tax. So the government checks you in 4 cases called buds. They still remain the same. There is no change in that. Next, cost. Guys, if you remember cost, example, the gold that I buy, the house that I buy, the shares that I buy, they all have a cost. The government used to give a benefit of indexation, but on or after 23rd July, they said, sorry, no indexation, which is bad for a taxpayer because now the cost cannot be stretched like a chewing gum, but it's good for a student because as a student, you don't have to divide, multiply, do that indexation. So if my cost of a house 10 years back was 10 lakh, even now it is 10 lakh, there is no indexation concept today. This is good for students since we do not have to do indexation calculation. So guys, what changed? One is period of holding change and cost of acquisition and cost of improvement. There is no indexation, no other change here. We move ahead. Guys, if you remember, I sold one house, bought another house, no change there. Sold agricultural land, bought agricultural land, no change there. So no change in the exemption, but there is change in the rates of tax. Earlier, my gold, etc., used to be taxed at N20. N20 means if it's short term capital gain, that is a 30 lakh gold sold for 38 lakh, I would be taxed at normal rates if it's short term, and 20% if it is long term. I-20 basically indexation and then 20%. Now this has changed on or after 23rd July. The government has said that N20 will now become N125. What is this N20? 125? 30 to 38. This will be taxed at normal rates only. But if it's long term, then it will be taxed only at 12.5, not 20%, which is a reduction. Yes, but you won't get indexation. So remember, it's N125, not N20, if the asset is sold on or after 23rd July. So this will apply only when you have to calculate your taxes, not before that. That's one major change, N125. And next, what is the most ideal time to buy shares, guys? Earlier, the ideal time to buy shares was at 15:10, if you remember, because short-term capital gain at 15%, long-term at 10%. The government now had decided to change this. If you're selling shares on or after 23rd July, then this 15 has become 20 and this 10 has become 12.5. This is because the government wants a little more tax from us. How do you remember it now? The most auspicious time to buy shares is now 2 o'clock in the afternoon. Yes, right now it's 1:17 on my clock, 2 o'clock in the afternoon. And if you miss that, then at 12:50 before that was the most ideal time. So two ideal times. That means if I buy some shares of 30 lakh of Zomato, sell it for 38 lakh, and it's a short term gain, 20%. If it's a long term gain, 12.5%, and that too above 1,25,000. Earlier it used to be 1 lakh, now it is more than 1,25,000. I put these shortcuts here. 2 or 12:50 is the best time to buy these shares. All right, that's one. So I'll summarize the changes. Period of holding, not a big deal. Cost of acquisition, no indexation. That's a great thing. Rates have changed, so make sure when you calculate the rates of tax, in case the question comes, most times it's basically compute capital gain. But if they ask you for tax rates, then remember, see the date. If it's on or after 23rd July, then check for N125 for the other assets. And if it's listed assets, then 20 or 12.5. That's first. That's second. Now, a lot of people did not like this, that there was no indexation. So the government said, listen, are you an individual or a HUF? Only for those people. And are you selling a land and building, not shares, not gold, only land and building? Then we'll give you two options. One, of course, is right now N125. That is still there. That means if I have a land and building, let's say I have a land and building of 30 lakhs and I'm selling it for 38 lakh, and I have a long term, short term capital gain, it will be taxed either at normal rates or 125, if you know. But I have been given an option that if you want, you can, even if it's after 23rd July, you can still take indexation in I-20. That means on this normal rates, or you can do indexation and then take 20%. You can do whichever is better for you, Swiggy and Zomato. Guys, remember, so this is after 23rd July, no indexation is allowed except for individual HUF who are selling land and building. So let's say Reliance is selling something, no indexation. You and me are selling something, yes, but only if it's selling land and building. Then we get Swiggy and Zomato and we'll choose whichever is cheaper. Let's say here the tax comes out to be 10 lakh, here the tax comes out to be 8 lakh, then you'll select this. Here it comes out to be 1 lakh, here it comes out to be a loss of 20,000, then you'll obviously select this, but sorry, this loss cannot be set off or carried forward. So that means if you get NI-20 and there's a loss in that, then you will be considered as your income is zero, because they don't want you to set off that loss in this option. I've summarized all this. So these are major changes. Repeating again because there's a lot of hype on capital gain. First, period of holding has changed. Next, N125. Next, 20 and 12.5. And this option of for individuals and HUF, this has changed. This is a summary on capital gain. Go now ahead. Whenever you revise capital gain, now whenever you do the sums, keep this in mind. Everything is the same if the date is 23rd July. But after, on or after 23rd July, these are the changes that you should keep in mind. All right, and we continue, guys. The next is chapter called salaries. Salaries is when you have SAP and SEP. You can get salaries from your employer or master, as we say, or allowance and purposes, then all taxed. And you have deductions of SEP. In that, a small change which you more or less know about, guys. In the standard deduction, now the deduction is 75,000 rupees, but only if you go to the new scheme. In the old scheme, it's still 50,000. So check in the exam which scheme they're asking you to be. And accommodation perquisite, again, I've discussed this in class, because this is for the year 23-24, this change. But guys, if a house is given to you by your employer and it's a perquisite, how do you value it? It will be either 5% of your salary or 7.5 or 10, depending upon the population as given here. We've discussed this in class, so I'm not speaking about this in length. Next, deduction under chapter 6A. You have an employer. You have an NPS account, your employer is good enough to contribute some money to your NPS account, let's call it 7 lakh rupees. Now this 7 lakh rupees is going from a master to an employer, so first it will be added in salaries. And then because you can't use it today, you'll get a deduction under 80 CCD, but 2 because it is master's contribution. But just remember here, you can take deduction up to 14% of your salary. So if your salary is 10 lakh, 14% is 1 lakh 40. Can you take 7 lakh deduction? No, you can only take 1 lakh 40. Basically, maximum is 14% is the new scheme. In the old scheme, this still remains the same as 10%, which you would have studied earlier. Next, guys, you're a country's champion and you're an Agniveer, and there's an Agniveer fund which has been made. In that Agniveer fund, if you contribute, you'll get a deduction under 80 CCA. This is just like a provident fund. And if your master contributes, example 25,000, that will first be added to your salaries because it's going from the master to the slave, and then you'll get a deduction under 80 CCH2. Next, ATD. Remember, doctor, medical insurance, you've taken a premium policy, that will be allowed as a deduction. 25,000 or 50,000 is the limit. But not just that, if you paid for medical expenses for yourself or your spouse or your children or your parents, that also can be taken as a deduction if the person is a senior citizen and has no medical insurance. In ATG, in the second category of funds, now they have removed Jawaharlal Nehru, etc., and they've only put drought relief fund. This also more or less you should be knowing because this was done a couple of years back. Now we go to TDS, TCS advanced tax. Let's see what the changes are there. Not many changes there, except guys, TDS, whenever there's a payer who's paying you some money, they deduct TDS and pay to the government, so your money is blocked. The government decided to block less amounts and reduce the TDS rates from 1st October 2024. So check the exam. If it's before 21st October 2024, old rates. But after that, guys, 194 online will only deduct 0.1%. That's great. 194H helper, D doctors commission, and G gambling commission has been reduced from 5% to 2%. That's also great. 194 DA, when you get money from life insurance more than 1 lakh, it will be at 2%, not 5%. That's also great. And 194 IB and 194 MBCUs, which was for small individual. We had joked about their height is 5 feet. Now their height is reduced to 2 feet only because it's 2%. These changes are only from 1st October. New sections: 194BA betting app, 194S speculation, and 194R reels. You already know about them, so I've written that these are new sections. And 20C, 1G, guys, TCS. There's a seller who's selling some forex to you or giving you overseas tour program. The government has decided there will be TCS on that. You already know this section called global. Only thing, I'm summarizing the rates. If it's any general purpose, then only if the remittance is more than 7 lakh, then there'll be TCS at 5%. So up to 7 lakh, nothing. Above 7 lakh, 5%. If it's for education remittance and you've taken a loan, not medical, only education, that's a change from what you already know, then the government says only above 7 lakh, we will take only 0.5. So nothing up to 7, above that 0.5. But if it's for overseas tour program, the government is jealous because you should have traveled in India, but you're going abroad. So without any limit, up to 7 lakh, 5%, and above 7 lakh, they will collect 20%. That means if you've taken 9 lakh of remittance for an overseas tour program, you paid some K3 travels or some other travels, then up to 7 lakh, they will collect 5%, and above 7 lakh, that is 2 lakh, they will collect 20% TCS. This is only when you pay a tour program, or when you go abroad and you use your credit card, there will be no TCS. This is next. Next is return of income. Guys, at the end of the year, by June, you need to file a return of income. You and me already know that. The due date is June, July, October, November. Can I file a belated return also? Yes, till 31st December. But now the government has introduced a concept of updated return, which you already know. It's already there in our books and our notes, but I just want to summarize it. In the updated return, you can file the return within 1 year after the assessment year and pay the tax along with the additional 25%. And after 1 year till the next year, that is 2 years from the assessment year, you have to pay 50% extra. This is for all those people who want to come out clean to the government and pay a little extra tax but come out clean. This is owning up to your mistake, but this can be done only within 2 years from the assessment year. Next, rates of tax. And last, actually, rates of tax. Guys, rates of tax, 115 BAC, it's a better available choice. It's Zomato, Swiggy, you can choose everything. Only thing here, the slabs have gone through a change. Guys, so for your year, that is 24-25 previous year, and AY 25-26, these are the new rates which you have to use in the exam if they say the person has opted for the default tax regime. If they say has not opted, then it's the old rate, there is no change there. And if they don't mention anything, they have to assume it's the default tax regime and you have to use these rates. Up to 3 lakhs, nothing. 3 to 7, 7 to 10, 10 to 12, 12 to 15, and more than 15. How do you remember it? I'll tell you guys. Up to 3 lakh, 0, that is basic exemption limit. 3 to 7, 3 plus 7 is 10. So 3 to 7, then 7 to 10. That's a way of remembering 3 to 7. 7 after that, 3 plus 7 is 10. So 7 to 10. Then 10 to 12, 12 to 15, and more than 15, or to by heart it. 0, 5, 10, 15, 20. There's no 25%. I'm removing this. This is 30% because you know, guys, the Nirmala Sitharaman's least favorite number is 25, or unlucky number is 25. No alternate minimum tax, and here you get a rebate up to 7 lakh rupees. So if you're earning up to 7 lakh rupees, then the new income tax default tax regime, you will calculate your basic tax, but you will get a rebate after that. So this summarizes all the amendments. Now, how do we go about it? I'm assuming you will buy a new book. Once you buy a new book, guys, do yourself a favor. Every chapter, look at it the old way only. Watch my fast track course, which will be very helpful from YouTube, or you can purchase it as well if you want the entire fast track course. And along with that, use this amendment sheet. And after every chapter, try and see what the amendment is. Only for capital gains, try and see the amendment before you start the chapter. And look at the new book, look at the new numbers. And don't worry, beyond all the hype, the tax remains the same, DT remains the same, only some changes which I have summarized here. I will attach the Google Drive link that should help you, and also a PDF that should also help you. That's about it. This is the DT amendment list. Watch out for the GST amendments also very, very soon. Thank you and all the best.